I mean, you spoke about so many powerful things, especially, um, and I think one thing about life insurance that many people don't really know much about, because I just learned about this somewhat recently, the potential to even build wealth out of it. I know you mentioned, obviously, you know, using it to buy land or properties or things of that nature. But even while a person is alive, being able to tap into it, I think many people they're not aware of like that side of it. So can you, I guess, speak a little bit more about the wealth building aspect of life insurance? And yeah, if you can just speak a little more about
So,
that.
like I said, a lot of times when you think about building wealth through life insurance, this happens through permanent policies, right? And so a lot of people are afraid to get permanent policies or don't get permanent policies because, yes, it is expensive. It is more costly than you getting a term policy. But one of the things that I think we are not really educated about is that you can get life insurance as early as like less than a month old. So the thing with life insurance is that the younger you get it, the cheaper it is. So imagine if you have a 1 month old baby and you put like a permanent policy on that child, right? And so, already that child is already ahead because that's going to become the child's norm. And as you grow, you can get more policies. And then, like, as they grow, obviously, you're going to get those policies on your kids. So, I want people to think about, like, hey, maybe it might be too expensive for me to get it because I'm older and I have like a lot of health conditions. But let's not repeat that same thing with my kid. Like, I can get this policy on my kid and set them up to be in a better place so that their kids will be in a better place. So when you think about building wealth, again, going back to the question, like you think of the whole lives, you think of the IULs. And so with these policies, one of the key things to it is that you have to fund it the proper way. So just like with your house, to own it, you have to pay your mortgage and make sure that everything is set. With the policies, you have to fund it. You have to fund it because usually with them you have a certain amount of it that's going to go towards paying for the policy, and then a certain amount of it is going to go towards increasing your cash flow. And so a lot of people don't really see that growth, or they don't experience that growth in your policies because they're not educated to fund it properly. And then another thing that you have to consider with these policies is that if you're doing it to have that growth, it also has to be designed the right way. So not everybody is educated to design it the right way to reflect what you want it to do. So when you are sitting down with an agent, like, it's very important to ask them questions about how they are designing it, right? So you think about, like, is it a level policy? So that means that, like, it's not really growing. Is it an increasing policy? So it's growing. And there's so many like jargons and I don't want to get into it, but it's very important for you to ask them, like, how is it designed? And I think that just for your own peace of mind, like, go to different people. Don't go to just one person and see what they say. Go to different companies and see what they say, because some people think that they know how to design it, but they really don't. And I'm going to use this example like with my dad. So my dad thought that he had like, the permanent IUL policy that was increasing, where he could increase the cash value. Well, he was like, okay, I'm good, I'm fine, like everything is good. But then when I got into this, I was like, hey, like, let's review like your insurance policy, let's make sure that we're good. And then going there and reviewing it, it was like what he thought was happening was not happening, because it was not an increasing policy, right? So it didn't allow him to grow money into the policy. It also didn't allow him to really put much money into the policy. So again, if you can't put much money into it, you can't really grow much money. And so that was something that my dad, thinking he had set up the policy 5 years ago that he was good and he would be fine, just realizing that no, he can't really, he has a life insurance policy, but what he thought was supposed to be happening will never happen. And I take this to heart so much because I've seen it happen with my dad, and I'm grateful that we're able to catch it and, do some changes. But some people will live your whole lives thinking that your policy is set up properly, and just to come and find out like what they thought was happening is not happening. So I always say, like, ask questions, get a second opinion. Don't be scared, because this is your money, this is your growth, this is your investment. If you want to, like, rethink it, call your agent every year. Make sure you're seeing what you're supposed to be seeing. Like, do not be scared to ask your questions, because you would rather know earlier than later, because you don't want to end up like my dad, who thought that, okay, 5 years ago he was good, but then realizing that, hey, this is not what we thought it was supposed to be doing, and we have to start over. And you have to understand that, again, within that time span, a lot of things can happen. The older you get, the more expensive it is. If you get like a chronic disease, the more expensive it is, and it might be challenging for you to get approved. So it's a lot of things. So that's why I just tell people, like, the younger you are, just get it, because you have less issues. It's easier for you to get approved, and you can always build upon. But as you get older, it gets more expensive, you're higher risk, and there are a lot of things that they factor into it.